The following is a presentation of TFNN. The following is a presentation of TFNN. Live at TFNN. Breakout Investing. With your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. As always, the number to use to call is 877-927-6648. 877-927-6648. My show airs now 5 days a week on TFNN from 3 to 4 Eastern. And you can pick up my show as a podcast on iTunes and also a cool app I've been talking about recently on iTunes called Downcast. I think it costs $1.99, but a real easy way to access podcast via download. So check out Downcast, a cool app. And don't forget, you can listen to all TFNN programming on your handheld device, your iPhone, your Android device, whatever you have. TFNN.mobi. Just type that in your smartphone browser. TFNN.mobi. You can listen to the stream that way as well. Don't forget to check out Tiger TV on the homepage of TFNN.com. You can look at charts right along with me, listen to the show live, and look at the charts. Channel 1, the show is carried live, and Channel 13, it is archived. And Tiger TV is also viewable with your handheld device. All right, pretty decent day for the market here. Let's check in on the NASDAQ composite here. Trading in the middle half of its trading range right now. A good day for the NASDAQ composite, up 35 points, 1.2%. Still trying to get a read on this market. Don't feel like I have an edge right now. Yeah, there are a lot of stocks moving higher, but there are stocks moving lower as well. Still doesn't seem to be an environment that is exactly conducive to growth stocks. A lot of the stocks that I'm seeing moving higher here are stocks that really have been hit hard since April and May, stocks that came in well off their highs. They're down near lows, and they're starting to make what could be dead cat bounces, but still a very tricky environment out there if you're a growth investor that likes, relative strength and stocks with good fundamentals, fast-growing companies. Some cases, higher multiple, higher beta stocks. Still a very tricky environment for stocks like that. So, despite pretty nice gains for the market today, 1.2% gain for the NASDAQ composite right now, it really is only the first day of a rally attempt here. So one day of strength is not going to automatically negate the distribution days, the higher volume declines that were seen in the NASDAQ basically since July 10th. Distribution pretty pronounced in the NASDAQ composite. Not a great environment right now for tech stocks. Of course, we saw Apple respond pretty negatively to earnings last week. You can see it's still stuck underneath its 50-day moving average here. Apple up 5 cents today. Isn't that amazing? NASDAQ composite up 1.2%. Apple just up 5 cents to 575.02. Be interesting to see if this 50-day moving average turns into a ceiling for Apple. Take a look at Amazon. AMZN ahead of its earnings report after the close today. Look at Amazon. Falls below its 50-day moving average yesterday, moves above it just for a brief spell today. Now it's down 27 cents to 216.78. So Amazon showing very squirrely price action here. Another large cap tech name that recently reported decent earnings. eBay hanging in there pretty well. It's basically just kind of keeping pace with the NASDAQ today, up 55 cents, 1.3% to 43.74. Acting pretty well after its gap up last week on earnings. But by and large cap tech, mid cap tech, small cap tech, a lot of stocks that I think should be doing well today really are just kind of flailing around and not really doing much. So despite a decent gain for the NASDAQ today, I'm not convinced yet that this market is ready to turn higher. At this point, we're just going to look for another sign of strength in the major averages. It could very easily come next week. Remember, we've got this Fed meeting July 31st, August 1st. That's going to take place next week. A lot of speculation that the Fed is ready to act. They're going to announce more stimulus. Remember, a big reason behind today's gains is that the European Central Bank chief Mario Draghi basically pledged to defend the euro. So that brought buyers out from the market. But again, after a lot of selling in the NASDAQ, let's go back to the NASDAQ composite chart here. So you headed into today, it was down for 4 days in a row. So you get a big one-day snapback like this, and you can bet that a good part of it, at least some of it, is short covering. People that were short the market the prior 4 sessions, covering their short position here. So you want to wait a couple days from now, 4 days into a rally attempt, 5 days, 6 days, and see if you can get another big percentage gain similar to the one that we saw in the NASDAQ back on June 29th. And for all the major averages for that matter, usually you get some additional follow-through that can often mark the start of a meaningful uptrend. Not all the time, but it can, so you want to be aware when that happens. So what happens today in the market, even if we do end near highs, we just chalk it up as a good day for the market. Again, some short covering. Don't really care what happens on day 2 of the rally attempt, which would be Friday. Day 3, Monday, would not be that significant. But, Tuesday, Wednesday, Thursday, Friday, if we can get another, big percentage gain, 1.5%, 2%, and see some volume behind that move, that would be a good sign. It would be make the move more believable. But like I said, a lot of headlines. 2-day Fed meeting next week, July 31st, August 1st, and don't forget the jobs report. The jobs report is coming 1 week from tomorrow, next Friday. We've had dismal job growth in recent months, and really not much reason to believe that we're going to see a good number this time around either. So expecting more volatility ahead, but welcoming a nice day of gains for the market today. Let's take a look at the S&P 500. Haven't checked on that yet. We'll see that it is, interestingly, trading up near its session high. So you get the NASDAQ composite kind of flailing around, trading in the middle half of its range, but the S&P 500 up 1.6% today. Good showing. Still day 1 of a rally attempt here. It is, holding firmly above its 50-day moving average, up close to 22 points to 1359. And why don't we check on the Dow here, Dow Jones Industrial Average. It too is trading up near its session high, up 1.7% to 12,894. Let's check in on the NASDAQ composite. I would expect NASDAQ 100, I should say. A lot of large cap tech weighing this index down, but not too bad, up about 35.5 points, 1.4% to 2584. So that's hanging in there pretty well. The laggard index right now is the NASDAQ composite. Crude oil today up 0.5% to 83.39 a barrel. Gold for August delivery rose $7, 0.4% to 16.1510 an ounce. Check in on the UUP. This is an ETF that basically tracks the U.S. dollar index. Dollar under quite a bit of pressure today. UUP gaps down to its 50-day moving average. The 50-day moving average for UUP is at 22.76. The ETF right now is trading at 22.77. So just a penny above its 50-day moving average, down 21 cents. That's 0.9%. So dollar under quite a bit of pressure today, and that is lifting oil and gold prices. A lot of these recent internet IPOs under pressure today, and a pretty decent tape. Let's take a look at shares of Zynga. It is getting walloped today, down, loses almost 39% of its value today to $3.12. This has been, dead money for quite some time, just stuck in a nasty downtrend. Obviously, Zynga has a pretty big presence on Facebook, but The company they do social games on Facebook, Farmville, things like that. They reported sales and profit that were well below expectations, and they also cut their guidance significantly because what it referred to as a, quote, challenging environment, unquote, on Facebook. Speaking of Facebook, let's check in on Facebook ahead of its earnings report after the close today. This should be interesting, to say the least. Facebook under a lot of pressure today, down 7.5% to 27.15. 27.15, the last quote on Facebook. Again, earnings after the close, they're expected to earn 12 cents a share, only up 9% from a year ago. Decent top-line growth, up 28% to $1.15 billion. Still a very pricey stock out here, selling at about 69 times trailing earnings and 43 times forward earnings. I'll tell you what, with a multiple like that in this type of market, you really, really are going to have to deliver pretty strong bottom line and top line growth in coming quarters for the market to continue to be comfortable with a multiple like that. And whether or not Facebook is going to be able to deliver that growth remains to be seen. So Facebook looking not that great ahead of earnings, but this is what we're seeing. A lot of earnings reports lately, a lot of these stocks where a lot of bad news has been priced in recent months. So much bad news has been priced in. Sometimes you see these stocks pop if there's any semblance of good news. So that's not out of the question for Facebook. But I would imagine they're going to have to come in with a pretty significant revenue beat. Anything over $1.15 billion should be pretty good. Economic data today, Thursday we had weekly jobless claims. Recent weekly jobless claims data have been very, very volatile. Usually the month of July you see a lot of auto plant shutdowns in Detroit, which can often skew the data, and we've been up big, down big, up big, down big, just all over the place. This time around, last week claims plunged 35,000 to 353,000. People not really putting a whole lot of stock into that number just because of month of July can be volatile. Durable goods orders rose a better than expected 1.6% earlier today. That was the June reading, but excluding an 8% rise for transportation equipment, durable orders fell 1.1%. That was the biggest decline since January and well below expectations. Ex-transportation for a decline of 0.1%. So kind of mixed data on the durable orders front. Don't forget tomorrow, Friday, a pretty key reading on economic growth. The first estimate to second quarter gross domestic product expected to come in at 1.2%. That's much slower growth than what we saw in the first quarter, 1.9% growth in the first quarter. So we'll probably get more color next week from the Fed on where it sees the economy right now and what growth prospects look like for the rest of the year. Also on Friday, University of Michigan Sentiment Consumer Confidence Index, the final reading for July. There was an earlier estimate that came out earlier this month, so we'll get the final data point for the University of Michigan Consumer Sentiment Index tomorrow. All right, folks, got a lot of earnings reports. This is really the earnings hour, not breakout investing. This is just the earnings hour, so we'll go over a lot of earnings reports when we come back. We got Equinix making a big move today, Visa acting well, a lot of stocks gapping up, but tough buys, I got to tell you. All right, folks, we'll be right back. Coming right back, Ken Shreve, Breakout Investing.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Haven't talked about volume yet today. Looks to be nicely higher on both exchanges. Right now, tracking about 10% higher on the NASDAQ, close to 20% higher on the New York Stock Exchange. So, a little bit of conviction behind the buying. That's good to see, but still very early here to tell if this uptrend is going to amount to anything. So, still really not eager to take meaningful new positions here. Still fairly conservative with the Ultimate Growth Stocks model portfolio. It's a newsletter that I write at TFNN that's updated every Tuesday, and then in between I send out email buy and sell alerts, market updates for the model portfolio. I've got 4 or 5 names in there right now that I'm giving a chance to work in this market environment. So if you want to check out a trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com in the carousel there, Ken Shreve's Ultimate Growth Stocks. You can also access it in the newsletters tab on the homepage. Click that, then click on Investment Newsletters. You'll find Ultimate Growth Stocks in there. Or just go to kenshreve.com. That takes you to my info page at tfnn.com, and you can click on the green Ultimate Growth Stocks banner. Try 30 days. Absolutely free. So decent volume today in the major averages. That's a good sign. I'm talking about some of these earnings reports. Home builders. Remember yesterday we had new home sales came in pretty disappointing, and some selling pressure has been building in the home building group. But we did have a couple of earnings reports in the sector today. Let's take a look at Pulte Group. Last check, this stock was up nicely, and sure enough, look at that, up $1.77, 17.7% to $11.80. Pulte said orders jumped 32% from a year ago to 5,578 units. They earned 11 cents a share. That reversed a loss of 15 cents a year ago. The earnings of 11 cents was about 6 cents above what the consensus estimate was. Revenue up 15% to just over $1 billion. So big day for Pulte. But this is just a good example of how difficult this market is, because if you're long Pulte before today and you're seeing pretty clear signs of institutional selling, I mean, there's some nasty reversals in this stock. Heavy volume decline last week. Sign of institutional selling yesterday. Nasty day for Pulte Group. Heavy volume decline. So, just a tough stock certainly to be long ahead of earnings, but, you roll the dice and say, screw it, I'm going to hold on to it anyway. It would have worked out for you. But still, a lot of stocks acting super weak ahead of earnings, and, they do their best to shake you out. But Pulte Group, pretty decent numbers. Checking in on Ryland. Let's take a look at Ryland Group. Earnings from them as well today. Not a bad report at all, but the stock not responding that well. It is down just a little bit, 8 cents to $24.73. It's down about 0.3%. Still holding above its 50-day moving average here is Ryland Group, but Ryland also reported profit of 15 cents a share. That reversed a year ago loss. Sales up 39%. Great top line growth at Ryland Group, up 39% to $293.8 million. And popular ETF that tracks the home builders. Check out ITB. Some pretty nasty selling in this fund in recent days as well. Rallying back in light volume today, up 77 cents, 4.8% to $16.70. But you can see these big red volume bars here in stockcharts.com. There's some pretty big sellers in that fund and some low volume rallies. Normally that doesn't jive, so I'm still cautious on the home builders here, mostly due to recent signs of professional selling in that group. All right, let's check in on some of these earnings reports. Shares of Equinix, EQIX, another stock that not really massive amounts of institutional selling in Equinix ahead of earnings, but it did give up its 50-day moving average recently, down 5 days out of the past 6 sessions headed into earnings today, but a big gap up for Equinix today on what the market is interpreting as pretty decent earnings, up 14% from a year ago to 73 cents a share. Equinix is a data center operator, well-positioned for growth. Annual earnings expected to be up big this year and next year. Sales up 18% to $466.3 million. What's interesting is you're a high multiple stock like Equinix and you report sales growth that is decelerating from the prior quarter. That's not necessarily a good thing, but it did decelerate at Equinix. And hey, who's going to argue? Stock up almost 13% today to 182.09. Nice little breakout here from a base-on-base pattern for Equinix. All right, folks. We'll be right back. Breakout Investing on TFNN.
December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Major averages hanging in there pretty well. About 25 minutes left to go in Thursday's session. Dow and S&P 500 leading the way, both up about 1.7%. Dow up about 212 points, 12,888 for the Dow. The S&P 500 up 22 points. 1.7% to 1360. NASDAQ Composite lagging a little bit, but not by much, up 40 points, 1.4% to 2894. So, like I said, seeing a little bit of accumulation in the major averages today, but 1 day of strength isn't necessarily going to erase the problems that the market has been experiencing. The folks over at Investors Business Daily now have the market back in correction, and I still follow the big picture column very closely to keep me up to speed with what's going on in this market. I think it's when you look at the fact that all these big leaders, the Pricelines, the Chipotles, the Apples, the Intuitive Surgicals, that they have all rolled over in heavy volume here. This is, it's a sign that there's eventually going to be a rotation. That happens in the market. The bottom line right now is that it's not clear to me that new institutional money is coming in from the sidelines. So, strong day for the market today, but after all the distribution, a market uptrend just does not start in one day. So we're welcoming the strength today. We're going to need to see a little bit more, and we do have some pretty key headlines coming up again next week, Tuesday, Wednesday, with the Fed meeting and then the jobs report on Friday. So always, keeping that watch list up to date with ideas, looking for stocks showing signs of accumulation. Talking about Equinix, we went into the first break. This is it's a good solid breakout today, but the challenge here is even though you had a gap up, you have a stock that's gapping up from deep inside a base. It was below its 50-day moving average yesterday. It's just a very, very tough buy. You wouldn't be breaking the rules by buying it today. To me, it still looks like it's within. It still looks like it's within buying range here. Trading just over resistance at 178, 179 thereabouts. It's at 182.09 right now, and it's a nice breakout from a base on base pattern. So let's take a look at Equinix. And what I did was I just highlighted this base on base pattern here. You had a base that formed here, and then a second base, and then a breakout from the entire pattern. So if I don't mind buying heavy volume breakouts, especially stocks with strong fundamentals. The question is, are we in an uptrend right now? And technically, we're not. We're just not in an uptrend. So I took a pass on this one today. Plus, if I were buying it, I would have been forced to, buy a stock that was already up 12, 13%. And when a stock gaps up in heavy volume, sometimes it's okay to buy a stock that's up that much, but just kind of felt like I was chasing a little bit, so I took a pass on Equinix today. But a good solid move for that stock. Let's take a look at Visa, another stock that's just not viable here. It's kind of showing, a little erratic trading in its chart, but Visa right now up $4.50, 0.7% to 126.70. And not a base breakout here, just a big one-day move after pretty severe weakness in Visa. It came down from about $129 a share to $122 ahead of earnings, but the numbers from Visa are pretty good. Earnings up 24% from a year ago to $1.56 a share. Sales up 10% to $2.56 billion. Visa is another example of that 10% revenue growth in the quarter was decelerating growth from the prior quarter. So normally that's not the best of signs, but hey, buyers are in the stock today, so Visa acting pretty well here. Whole Foods Market, another stock that gapped up today. Not an easy buy at all. First of all, it's a late stage base, and look at all the selling pressure in Whole Foods. This never ceases to amaze me. A stock that literally had fallen apart. Corrected from about $97, $98 a share down to $82 in a relatively short period of time. Just waves of selling in the stock, and then boom, they come out with earnings, gap up above the 50-day moving average. Whole Foods Market is a late-stage base. This is another stock. My buying parameters might seem strict, but they're really not that strict. But Whole Foods is a stock I'm not going to touch either because it's already made a massive price move, and when you gap up after just a steep sell-off, this is one that if it's going to continue to go up, it can go up without me. So good day for Whole Foods Market. Earnings up 26% to 63 cents a share. Sales up 14% to $2.7 billion. Company continues to execute, fire on all cylinders. Let's check in on a recent new issue in the group, the Fresh Market. The Fresh Market up 6.2% today to 54.57. Nice gap up above the 50-day moving average here as well. The main difference between the two, I still think Fresh Market is still in the early stages of growth. This is a company that came public in November 2010, so it's a new issue. I think growth prospects are just better at Fresh Market. So this one gets my nod over Whole Foods at this time. Let's take a look at Akamai. This is an example of a stock, plenty of examples of this. Stocks breaking out from deep inside their bases. Now, shares of Akamai up 24.5% today. Incredible move for the stock, $6.90. Not buyable according to the rules I follow. This is a stock that was, suffered severe technical damage and headed into the earnings report, and big gap up. I mean, the earnings were good. You have to give Akamai credit for delivering its third straight quarter of accelerating sales growth. That's no small feat, and companies should be credited for the accelerating sales growth. That's a good sign. Sales up 20% to $331.3 million. Earnings up 23% to 43 cents a share. So, good day for Akamai as well. Fortinet, another big winner today. Same deal. Stock under a lot of selling pressure. Big gap up. Do you want to buy a big gap up like this when the stock is, clearly wasn't able to get out of its own way before the earnings report? Yeah, take a pass on this one too. So Fortinet up 12% today, trading in the bottom half of its trading range at around 25.08. But buyers in Fortinet today. This is a provider of network security, software and hardware. Earnings up 33% from a year ago to 12 cents a share. Sales up 25% to 129 million. So yeah, you can see a lot of big movers today. Stocks that aren't exactly easy buys, at this point. When you're in the early stages of a new market uptrend, there should be no shortage of emerging leaders breaking out from bullish consolidation areas. And even though we're seeing a little bit of it, not really seeing what I want to see at this point. For example, let's go back to Equinix, and you can see it's just a good, solid base, breakout today. But the number of base breakouts really are still in short supply, and those that are, when you look at their fundamentals, they're really just not the institutional quality leaders that you want to see. Cabela's. Great breakout for Cabela's. Just a small cap stock. Nice breakout from a long base today. This is a retailer, specializes in outdoor equipment. Stock up almost 15% today. Just a monster move. 15% to $45 a share. But not the most liquid of stocks. I don't mind small cap stocks. I'm not averse to owning them, but Cabela's has an average daily volume, not bad, at just over 500,000 shares. But when I see sales up 12%, not bad. I usually like to see better sales growth than that, 20, 30, 40%. Earnings up 47% at Cabela's to 47 cents a share. So it was a strong quarter. Tough stock to buy. Remember, we're still in a downtrend. That's the bottom line. We're still in a market downtrend. One day of strength does not necessarily mean that we're destined to move higher from here. So Cabela's, a pretty decent day for Cabela's. Remember 3D Systems, DDD? This is a stock that had really come back to life. They reported earnings before the open today. Great bottom line and top line growth, but kind of a wild day of trading here. It's trying to hold on to its 50-day moving average. 3D Systems does three-dimensional printing, basically, and this is company that has shown really nice growth in recent quarters, and another quarter of good growth this time around, with earnings up 42% from a year ago, sales up 52% to $83.6 million, but stock down 40 cents, 1.2% to $33.89. So that's what's going on in the earnings front. I mentioned the Ultimate Growth Stocks model portfolio. Again, I'm still taking this market pretty slowly here. I feel like, for me to put out buy recommendations, for me to start adding stocks to my model portfolio, I really feel like I need to have an edge. I think you'll hear a lot of traders, a lot of investors say that. You have to have an edge. What is the edge? And, bottom line right now is I don't feel like I have an edge, which is why I am, just still kind of treading cautiously here. I feel much more comfortable, buying stocks and adding stocks to the model portfolio when I believe the chances are pretty good that we are in the early stages of an uptrend, and I can't say that right now. And plus, when I look through my growth screens, I say this a lot, but it bears repeating. If the growth screens are serving up, buy opportunities on a daily basis, that points towards a healthy market. If they are very hard to come by, if you're going through a screen of 50 stocks and you're only finding one or two that look interesting, you have to listen to that message, because when leadership is emerging, believe me, you're not going to have to look long and hard to locate it. Okay, it's going to be there right in front of you, and price and volume clues will give away the emerging leadership. And to this end right now, I'm just not seeing enough of it, and I'm seeing stocks, frankly, that I think should be leading this market, and many, like I said, can't get out of their own way. And again, the biggest problem is that we're just seeing a lot of former leaders rolling over. That's eventually going to usher in new leadership, but until that new leadership is out there in spades, I think it's still a risky environment. But again, I'm going to watch the market over the next few days. If we can get some additional follow through, that should be helpful in terms of unearthing more stocks with potential here. Let's take a look at Dunkin' Brands. This used to be a holding in my Ultimate Growth Stocks model portfolio. Sold this one and took profits recently. Glad I did, because it's been under a lot of selling pressure for several weeks now. Stock is down 92 cents today, 2.9% to $30.88. Kind of stopped right at its 200-day moving average. Saw some other newsletter writers today averaging down in their position. I just don't, I don't know if that's a good idea. They're lowering their average cost basis, but this is a stock that has been under quite a bit of selling pressure. What that means, I don't know. The growth was pretty good at Dunkin'. Earnings up 57%. Sales up 10% to about $172 million. So this is a company that does most of their business in the U.S. Still does not have a big presence in California, but they're making inroads out here. So the fundamental story with Dunkin' is pretty good. Why there have been so many sellers in the stock is the question mark. So not a stock that interests me here. I got to tell you, the earnings from GNC Holdings. This was a stock that I thought had really good potential. They delivered another excellent quarter with sales up 19%, earnings up 59%. I mean, look at this wild day of trading. A high of 41 and a low of 34.50. I mean, these intraday price swings are amazing. You've got a 6.5 point intraday swing in GNC Holdings today. So that really makes its chart ugly, really hard to tell where this one wants to go. But the numbers look pretty good, and their same-store sales growth, 12.9% same-store sales growth in the quarter. The fundamental guys will say there's nothing wrong at all here, but the technical guys would take the other side here and say that this is a chart that all of a sudden doesn't look too hot. A group peer of GNC Holdings, a name I've been talking about recently, Vitamin Shop. This is a stock that chart looks a lot better than GNC at this point. Shares of Vitamin Shop up 3.2% today to $57.25. Earnings here due August 7th. All right, folks, headed into the final break. Thanks very much for tuning in. Ken Shreve with you, Breakout Investing. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check in on the markets here as we head into the close. First with the NASDAQ Composite, up close to 40 points to 2894. Back above its 50-day moving averages, the NASDAQ Composite, good for a 1.4% gain on the day. S&P 500. Up near its session high, it is up close to 23 points, 1.7% to 1360. And we'll check on the Dow as well. So indices doing a pretty good job holding gains today. To me, this market still has to prove itself more. Remember all the headlines that we saw yesterday, that we saw on Tuesday, that we saw Monday, all the headlines last week, all the worry and all the problems with the U.S. economy and the jobs market. One day of strength is not going to just make everything all better. So it's important to have perspective here. The Dow right now up 219 points, 1.7% to 12,895. So at this point, I haven't checked on volume yet, but it was tracking higher than what we saw Wednesday, and it still is about 10% higher on the NASDAQ, about 15% higher on the New York Stock Exchange. So it's a day of accumulation. There's some good action out there, some stocks with potential, but still, a lot of just kind of weird action out there as well in terms of a lot of the growth stocks I cover. So let's take a look at Amazon. Amazon has come back, trying to, it still came below its 50-day moving average, now trading slightly above it. Earnings after the close here, Amazon now up 1.5% to $220.38. Swing point for Amazon here is $230 a share. Breakouts generally have not been working, and again, the reason behind that is that what breakouts, what they need is bona fide institutional buying. Okay, it's not retail investors that fuel breakouts from bases. It's heavy volume, sustained heavy volume, just not one day of heavy volume. It's really signs that institutions are acquiring stock. And really another thing, this whole bond market. the bond market holding up as well as it is. Let's take a look at the TLT. And yes, there's some modest selling in the TLT today, down $1.12, 0.8% to 131.04. But it's breaking out. So there's still money in bonds, and that is that could potentially keep a lid on the stock market. So until we start to see meaningful selling in bonds and meaningful buying in the major averages, I think it's still going to be kind of a tricky market where you're going to see really strong action one day and not so great action the next. But anyway, Amazon looking pretty good, not great but pretty good ahead of its earnings report after the close. Its profit expected to come in at 2 cents a share, down sharply from 41 cents a year ago. Amazon obviously been talking about this a lot, but has sacrificed profitability, or at least earnings growth in recent quarters, to really concentrate on spending. Infrastructure expansion, things like that. Sales up 30% to $12.9 billion at Amazon. All right, let's check in on Cerner, another name that's set to report earnings after the close today. It's trying to bounce back. This is another example of a stock where a lot of bad news has been priced in pretty quickly. Let's see if they report a decent number. Cerner does have a very good track record of growth, so wouldn't be surprised to see good numbers from the healthcare IT services firm. Earnings up 25% to 55 cents a share. Sales up 22% to $638.1 million. Also after the close, Coinstar, CSTR, and also Starbucks under a lot of pressure, but rallying ahead of the results. Coming up tomorrow before the open, Chevron and another home builder, D.R. Horton, ticker DHI. Coming up next, the Tom O'Brien Show. We'll see you back here tomorrow at 3 o'clock for another edition of Breakout Investing. Have a great afternoon.